Why e-commerce belongs in your portfolio. If your portfolio is just stocks and bonds, you're missing the one asset class that's quietly made regular people millionaires, and most financial advisors will never bring it up. In 2022, stocks dropped. Bonds dropped with them too. If you thought you were diversified, you still lost on both sides. That year proved the old diversification playbook has cracks in it. Today I'll show you why smart money is adding e-commerce brands next to their stocks and bonds, not as a side hustle, but as a real asset class. By the end, you'll know exactly how to get started, even with zero business experience. Part 1. Why diversification needs an upgrade. Here's proof that the old just own stocks and bonds advice doesn't hold up the way it used to. Between 2025 and mid-2026, the correlation between US stocks and bonds was just 0.11, almost no relationship at all. Back in 2022, that number was 0.66. Stocks and bonds moved together, so when stocks fell, bonds didn't catch you. Investors who thought they were protected still lost money on both sides. Correlations shift. What protected you last year might not protect you this year. The real question isn't, should I diversify? It's, what am I diversifying into? Part 2. Why e-commerce is the missing piece. Most portfolios look the same. US stocks, some bonds, maybe a few international funds. That's it. E-commerce works differently. When the S&P drops because of a rate hike or a bad headline, your Amazon FBA brand selling kitchen tools doesn't care. Its revenue depends on people wanting kitchen tools, not on what the Fed just said. It also produces real cash flow. A bond pays interest. A stock might pay a dividend if you're lucky. A well-run e-commerce business can throw off 15 to 25% net margins monthly that you reinvest or take home. And it's an asset you can actually improve. You can't call Apple and ask them to raise prices, but you can optimize a listing, renegotiate a supplier deal, or launch a new product, and directly move your own return. That's a different risk profile than anything sitting in your brokerage account. Part 3. The overlooked opportunity. Quick parallel. US small cap stocks underperformed for years, then came roaring back in 2026 while nobody was watching. Small e-commerce brands are in the same spot right now. Everyone's chasing the next flashy $50 million exit story. Meanwhile, there are hundreds of profitable, unglamorous e-commerce businesses doing $500,000 to $3 million a year that nobody's paying attention to. Big private equity skips these deals. The check size is too small for them to bother. For an individual investor, that's the sweet spot. Less competition, and a business small enough that one or two fixes can meaningfully increase its value. Part 4. What this looks like in practice. Say you have $150,000 sitting in index funds and cash. Everything you own moves with the same market forces. Now picture putting $50,000 to $75,000 of that toward an existing, profitable e-commerce business. Not a startup, not a gamble, something with real revenue and real customers already. You're not swapping your stock portfolio for a business, you're adding a third pillar that doesn't rise and fall with Wall Street's mood. And this isn't guesswork. You check 12 months of verified revenue, profit margins, customer concentration, and traffic sources. The same due diligence private equity runs on a $50 million deal, scaled down to your budget. Part 5. Why most people never do this. 2 reasons. First, most people don't know how to evaluate a business for sale, what a healthy margin looks like, or how to spot inflated numbers. Second, most people assume buying a business means writing a check for the full price in cash. It doesn't. SBA loans, seller financing, and revenue-based financing all exist to get you in with a fraction of the total price up front. Knowledge and access. That's the real gap. Not that e-commerce is a worse asset. That's where we come in. At TrendHijacking, we vet e-commerce businesses before they ever reach you, checking real revenue, real margins, and real supplier relationships. We also structure financing around your actual budget, whether that's $80,000 or $300,000. If you want a real conversation about adding e-commerce to your portfolio, click the link below. Diversification isn't about chasing every hot asset. It's about owning a few things that don't all move together. For most portfolios, e-commerce is the piece that's missing.